And right now, folks, we're going to jump over to our man, Steve Rhodes. Folks, you can check out Steve every trading day, 11 a.m. Eastern Time with the Trader's Edge. And right under the newsletter tab, folks, you'll see Mastering Probability, Steve's outstanding daily newsletter. Folks, he puts out morning updates. He puts out afternoon updates. He puts out updates on the weekend. And you get a number of amazing webinars with Steve's subscription service as well. And it comes with a 30-day money-back guarantee, folks. Head on over to the front page and check it out right now as we talk to our man. Steve Rhodes, good afternoon.
Good afternoon, Tommy. How you doing? Great to be with you.
Always good to talk to you, man. How was the weekend?
Good. Good weekend. Looking forward to tonight's baseball game. The World Series is here. I thought the first two games were great. Tonight's game, I think Scherzer is the pitcher for Toronto, so it's going to be a tough game for the Dodgers, but they are at home. And what's great is we've seen some amazing offense, some great pitching, but still there's been some good scoring games out there. So I'm looking forward to that. How about you?
Yeah, listen, the competition, man. There's nothing like good competition, right? Like totally. Some of these, when they work, they work so hard, right? They're living and dying on everything. They're professional athletes. They just work. So when they get to that level, just amazing to see, man, for sure. I always love it.
It's tough to be a baseball player. I've been friends with some professional baseball players, and it's not as glamorous as it looks. They are on the road a lot. Not
that you don't got to tell me, but I have these conversations, and we're digressing here, but I always, man, if you're making like $500 million, I don't know if I want that lifestyle, because I hear you, right? Especially if you have kids, but hey, totally. They're on another level, man. That's what it takes sometimes to get to that level, for sure.
It does. It takes commitment.
So,
like everything
this
else,
market, what are we looking at, Steve?
Well, I thought, I've received several emails and some of it dealing with statements that I make during the show. And the emails I've received are about major market tops out here. So I thought I'd just kind of clarify things for everybody so they can see where we're at. They may not understand my patterns, but as you pointed out, for 30 days, they can understand them effectively, because I teach everything that we talk about here. I teach people exactly what to do. So right now, we're taking a look at the S&P 500 going back to 2007. So, and what I'm really referring to here are major market tops. Major market tops have led to bear markets out there. And in 2007, the S&P 500, for its daily time frame, had a TD9 count top. That's that blue horizontal line. That was the high of the pattern. That remained intact. On a weekly time frame, it formed a Rhodes momentum indicator top, which was the same thing that took place on the monthly time frame. So before there's going to be any kind of major top out there, all three of these charts should have a topping pattern. Let's take a look at last Friday. Last Friday, the S&P 500 negated its Rhodes momentum indicator top for its daily time frame. It negated its weekly TD9 count top, and the monthly's got no topping pattern present. There is no major topping signals out here for the S&P 500. We are nowhere near any kind of a major market top. Now, during the last 25 years out here, the S&P has begun its Santa Claus rally on October 9th. That is the red arrow that I've got out here. This is a seasonal time frame chart, again, 25 years. The red vertical line is where we're at right now. So we are in a market that should continue to travel higher through the end of the year. And thus far, October 10th is really the low for every major U.S. cash index out there. Remember, we looked at the seasonal chart. It said basically it comes in around April or October the 9th. Here, I've got the highlighted candles for October 10th. And unless those lows are broken, the bottom should be in for the rest of the year for the markets, for all of these markets out here. Now, that being said, even though we negated a Rhodes momentum indicator top and TD9 count for the daily time frame for the S&P 500, today's gap to the upside creates bar number 8 of that TD9 count pattern. Tommy, a TD9 count top, should one form, it's not a guarantee that it will form, the high will come on bars 8, which is where we're at today, 9, or the bar following bar number 9. Now, what that should lead to is at least a 2 to 4 day consecutive decline. If we take a look at coming off of the bottom back in April, that was a major bottom, obviously April the 7th, what we'll see here is almost every single retracement has been either 2, 3, or 4 bars. We had one 5-bar move in the middle of August out there. And so this helps us to understand this. So I'm expecting we're going to see some type of short-term top between today and Wednesday, and then we see a retracement that lasts 2 to 4 days out there before the market resumes itself higher. If we take a look at the NDX 100, the NDX negated its daily TD9 count and Rhodes Momentum Indicator top last Friday, and it negated its weekly TD9 count top. That suggests that we move higher. The monthly time frame I posted in the A to B equals CD pattern to the upside. That has an initial price projection of 28,325. But we are trading along the left-hand side of this C to D leg. This is the exact same angle as the A to B leg out here. This says that we do more than a 1-to-1 A to B equals CD. You were talking about a party hat of 50,000. I think we probably need to change that to 60,000. But let's not go there because I haven't looked at I don't have the Dow charts out here, but I do have the semiconductor charts. And anybody can go back and take a look at their charts and look and find out, has there ever been a top that's formed without the semiconductors also forming that top? We take a look at it right now. The SOX for its daily time frame has got no topping pattern in place whatsoever. The weekly negated its TD9 count top last week. The monthly I show an A to B equals CD pattern. We're pretty close to the initial price projection of 71.99. Again, we're trading on the left-hand side of that C to D leg. That suggests that we do a larger move, but no major tops. We're not seeing any signals on any of these key indices that I've shared with everybody. No major top. So let's go back to some major tops. Here's the Nikkei. If we go back to the Nikkei in 1990, on a daily time frame, what we've got is a nice Rhodes Momentum Indicator top. On the weekly time frame, a TD9 count top. On the monthly time frame, a Rhodes Momentum Indicator top. I hope everybody's getting the picture out here. If we're going to see major tops in the markets, in the indice markets, we need to see topping patterns, and they're all the same topping patterns that we talk about here at TFNN. So there's nothing magical, there's nothing new, there's nothing that we force here. The markets will go ahead and communicate to us what its intent is. Now, we can go beyond even just the indices. We can take a look at gold. Gold's last major top I've got is 2011. In 2011, on the daily time frame, we had two Rhodes Momentum Indicator tops. On the weekly time frame, a TD9 count top. On the monthly time frame, a TD9 count top. So see, there's going to be a topping pattern. It doesn't have to be indices. It could be anything that we take a look at. An individual stock, a commodity like gold. If we take a look at gold out here, it's got a daily Rhodes Momentum Indicator top, a weekly TD9 count top. But nothing is present for the monthly time frame. So no major top in gold. But we can easily see gold pull back for 2 consecutive months. Why is that? Take a look at this rally up here. We are now in the 10th month of a consecutive rally. The bottom panel here shows us consecutive moves higher, consecutive moves lower. Coming off of this major bottom here in November 2022, all we have had are 3 2-bar moves to the downside. So if we don't have to have a major topping pattern. We don't have to have a topping pattern on the monthly time frame in order to get a 2-month pullback out there. But what gold has to do now, here's gold in all of the Middle Eastern currencies. It has topped on the same day. Here's gold when we take a look at so we have the peace accord between Hamas and Israel, and we have not taken out that closing high on a weekly basis. Here is the bottom portion where gold started at the Hamas attack. I believe there's tons of war premium inside here, so we've got to be careful because of the daily and the weekly signals that we've got for gold. And I would say expect a 2-month pullback.
Pretty remarkable charts, man. I appreciate the walkthrough as always. And folks, Steve was talking about those TD9 counts. When you sign up for Mastering Probability, you get that 30-day money-back guarantee. You get a number of webinars. One of them, Mastering the TD Setup 9 count. You can learn all about it, folks. Check out Steve's outstanding newsletter. Boy, those monthly charts, man, those are something else across the board. Steve, thanks so much as always, man. We look forward to the program tomorrow. Have a great night.
Thanks, Tommy.
Thanks. Folks, check it out. We're coming right back.